So I'm really psyched up today. Get to interview and talk with two of my kind of heroes over the last 25 years. Dan Wheeler, who really started up the financial advisor whole sector of dimensional fund advisors, and then my good friend Dave Butler, who has just been elevated to co-CEO position. Congratulations, by the way.
Thank you, appreciate it.
My pleasure. And I thought what I'd do just real quick is just kind of just take a little walk down memory lane and then kind of see where you guys think the whole industry is going, and then how investors can be best served and help them from speculating and gambling with their portfolios. So, Dan, initially I met you circa 1991 at Schwab conference with Rex Sinkfeld, and so just share, if you could share a little bit about the initial idea when you became familiar with dimensional fund advisors and their whole strategy, and then how it would help investors and maybe advisors could use it at the time.
Yeah, well, the idea came about before I even knew dimensional existed. I had realized that, having spent a short time in the brokerage industry, that there were two big problems. One was the failure of active management, but more importantly was the conflict of interest because of the commission, and so I thought there's got to be a better way. So I actually started for my clients in Sacramento with a fellow CPA friend of mine for financial advising. And, I was using the S&P 500 from Vanguard. And then for other asset classes, I would get the lowest cost, most broadly diversified active version because it's all that was available. And I read an article in the USA Today about this fall firm down in Santa Monica. Had about $5 billion under management, and they were totally passive, and they had one fund, a small cap fund. And I thought, well, I can add that asset class. Well, to make the story short, I ended up meeting with David Booth and Rex Sinkfeld, and I said, this whole, and I explained to them my view of the problems that the retail investors, individual investors were facing. And I said, I've got the solution. And they said, well, what's that? Well, we're going to have these fee-only advisors. And they went, well, what's that? They're like, oh, yeah, right.
Yeah, because all the clients up to that date had been institutions.
Yeah, all institutions. And they didn't want anything to do with individual investors because they felt it was hot money. And, and if
at the time it was. It
was. In and out, in and out, in and out. And I understood that completely, but I said, no, my clients, they understand that if that happens, they're out, okay? And I educate them, and they're big believers. So I give them credit, where credit is due. But anyway, it was, I never thought for an instant that it would fail, because here's two biggest problems for investors, and here's the solution. We turn it upside down, instead of broker with product, salesman, customer, we have investor, advisor who works for the investor, and then people who provide whatever that advisor comes up with. And this whole thing, I just go back when I tell people, the most amazing thing is, here's a firm that is now, I don't know, the 5th or 6th largest in the world. What do you guys have? 600 billion now? 550?
550, yeah.
550. And I tell people, that's why you've never heard of us. And then they go, hey, that's why we don't believe you. And so I tell them to go to the internet, they can check it out. But it really is amazing. And I said, it's going to take time, but I will find people who view it the same way. Like we were saying earlier this morning, I get it. And, Mark, you were one of the early people. And it's like, well, the rest is history.
It was both a godsend and really scary all at the same time, because I knew that the stock picking, the market timing, the active managers I was using for my clients was not working. Meeting you and Rex and David was really an amazing watershed event in my life, and full of both excitement and dread.
Yeah, exactly.
How are we going to figure this out? So David, when you met Dan initially, when did you guys first meet, and what transpired, and how did you become for lack of a better word, a convert?
Yeah, so I had the same experience. I think it was January '95 is when I started with Dimensional, and Dan, had this kind of this mission that I really kind of locked into, which was we want to better the client experience. We want to give a client a great investment experience, and so that was the story, the mission that we think about today. We've got 284 people in the financial advisor group at Dimensional, and every one of them is aligned with that purpose and that mission. So, the great thing about Dan, and I'd never seen or kind of really thought about this in the early 90s, mid 90s, when I first came aboard, was Dan said, look, there's this firm called Dimensional, and they're experts in the capital market space, and they know how to do the research, they know how to develop portfolios and structure them properly, they know how to implement very, very well. And we can couple that with this concept of independent, transparent advice from these advisors who sit on the same side of the table as the client. It sounds very simple, but I can tell you, for me at the time in 1995, I heard that, and it was kind of that, we call it the aha moment, where it was like, wow, I can be in this business, I can do something I'm proud of and feel good about, and I can help investors. So it was as I always say to Dan, it was an idea at the time. It was not an actual business. Dimensional, when I started in '95, was about $9.5 billion as a firm, and we had about $1.7 billion from financial advisors. So I would consider that more of a concept than an actual business.
$8.1 billion just for our firm, which was more than almost 8 times what you had. I mean, it's just amazing,
incredible stuff.
Journey.
So, but I think it comes back to me. It's the power of an idea. The idea is the right one, and the idea was built around this idea that we all wanted to. The early adopters, I'll call them the pioneers like yourself, and then the early employees. We wanted to change the world. We wanted to change the investor experience. We had seen a lot of things that didn't look like what we thought they should look like and be for the investor, and we wanted to change that. So that spirit and that energy, I think, kind of has resonated and made the culture really, really strong, not only at Dimensional, but at places like Matson Money.
So when you say the darker side, or the problems that people have with investing, I know personally I experienced it by using active funds with clients and my own money, and then watching the destruction as these active managers underperform the market. Do you have does any either personal experiences or just other experiences having seen other investors destroy their wealth by speculating with it? Does anything stick out for you when you think about that?
That's a great question. It's one we always try to, with new employees and or advisors, we always ask that question. People don't come to this concept until they usually have that moment where things that they thought were the right way to do things aren't necessarily the right way. So for me personally, my quick story was I was buying stocks. I was 8-0 in 1994. I had 8 wins, no losses, and I ended up, long story short, doubling down on a stock called Boston Chicken that we thought was going to be a great.
Is that the same as Boston Market or
same one?
Same one. All right.
Pre Boston Market. So my advisor, my stockbroker at the time.
Good cornbread, by the way.
Yeah. That's so good. The analyst and everybody had said this thing's going to go. Double in price, and long story short, I tell the story occasionally that I was in a hotel and there's no internet at the time, and so they had an earnings announcement, and my expectation, this stock was trading at 16, and they said it would go to 24. I ran down the lobby, grabbed a Wall Street Journal, opened the paper, and the stock, the number next to Boston Chicken was 6. And I had that moment of optimism. I thought, well, I noticed there was a crease in the paper, so I thought maybe there's a 1 slit in that crease, so I kind of pushed it apart, and there's no 1. And I lost literally half my net worth. So the lesson for me, the message was that, first of all, I had never had any discussion about kind of my holistic expectations, my long-term goals, my views on markets, all that. It was just sort of like, here's a stock, you should invest in it and you're going to win. So Dan used to always say, look into my crystal ball, find me a great stock, or tell me where the market's going to go, and that's going to be investment advice. And what that moment taught me was that is not investment advice. And investment advice, as we all know now, is it's holistic wealth management. It's a comfortable journey from point A to point B, and that might be 10 or 20 or 30 years. But it's the advisor / coach that is helping these clients actually get the understanding and the comfort so that they're able to have a more relaxful investment journey. Never easy.
So that was like you're like hitting bottom, like on the whole stock picking thing, and I always talk about how valuable that moment is. So it feels like desperation, but actually that's when hope of a better way kind of opens up.
Yeah, and it was that lucky moment because it was literally 2 months prior to that I was sitting in my office and I was looking at a newspaper, and I think it was the Wall Street Journal. It had a small ad, a 2-line ad that said Dimensional Fund Advisor, and I said, it's in California, so I liked the fact it was in California, so I sent a resume out, and that's when I ended up getting to see Dan. So it was that combination of like a really negative event coupled with this moment, this kind of this awareness moment that led me to actually interviewing at Dimensional, and here it is 23 years later, and it's just been terrific.
Funny story about hiring him though, because at that point I had 3 employees. I had Sam, who you all know, I had my daughter, and I had hired Bo. So I had basically 2 family members in Bow. And so I came in one day and I said, we're growing. I'm going to have to really hire a professional this time. So I ran an ad in the Wall Street Journal. I only did it once, that one time. And man, I got 300 resumes came in. And I had Christine, who was working for me part-time. I said, go through and see if there's anybody interesting. And she goes through and she
Sam was, right?
Well, he claims he went through it. It wasn't Sam.
You got to get to the real story.
Yeah, because I mean, Sam wouldn't have had the same. She knew because he went to Cal and I was in the PhD program there. And so she comes in and I said, you're going to love this one. This guy is a great basketball player from Cal, got his MBA from Cal, and I said, that's it. And it's like, I didn't look beyond that point. And he flew out and boom, that was it. I hired him. But it was so funny because I told those guys, I need a real professional this time.
He ended up with me. So.
Yeah.
Oh, well.
And now he's just,
and now you're co-CEO of the company, so that worked out pretty good.
Yeah.
So when we first met, speaking of the being young and trying to figure everything out, I remember one of the things that you told me was you're too young. You haven't had enough bad experiences yet, and kind of go away, kid. But I already had enough. I guess I have a low tolerance for that kind of pain because I already had enough pain. And of course I had my dad that had, really showed me, that this kind of stuff didn't work.
Well, Mark, you and I talked about it because you talked about losing your money, and that was kind of, you never had the opportunity that he and I had. I used to tell people the only thing worse than losing your own money, and you've heard me say this a million times, is losing the money of someone who actually trusted you and believed that you could do what you were doing. And I said, if that doesn't motivate you as an advisor, nothing will. And so you and I both had that experience. And some of our early advisors came right out of the dark side and became the most passionate advisors we had.
From the early ages, I remember when we first became aware of these concepts of market efficiency and you didn't have to stock pick anymore and market time. And it was like, to me, it was like this great epiphany. And I thought the whole industry would completely come this way. And probably in 20 years, there'll be no more speculating and gambling. And it'll be this great Renaissance awakening. But what I think I've seen over the last 25 years is there's more ways to speculate. There's more ways to gamble. Yes, there's academic information, but oftentimes it gets completely obfuscated or taken over by people that then say, but we are the ones that can do it. And then, of course, you got the online trading and you've got 24/7 news cycle for even investing programs. It seems like, to me anyway, that it's worse than it was even 25 years ago. I thought maybe we'd get your observations on just how hard it is for people not to lay off the high pitch and not speculate with their money.
Well, one of the things that's helped is, though, that even like the CEO of BlackRock has conceded active management doesn't work. I mean, and it's like, I wrote on my blog, I said, I just declared victory because, all of these people that have been doing active management for years have thrown in the towel. But what they're trying to figure out is, how can we do some version of passive management and still get some of their money? I mean, that's what they sit around trying to think of now, because they know the old story about we can pick and time, that's gone. But this idea that my job is to get your money in your pocket into my pocket, that's going to be here forever. And that's why the advisor business will continue to grow.
Yeah, I take the optimistic view on that. I think when I look back to that Boston chicken trade, it was 4.5% in and 4.5% out. So the theory was, if the stockbroker was able to get me to flip my portfolio 100%, their fee, if you will, was 9%. And when you look at where we are now, to Dan's point, the index movement, smart beta movement, when you think about independent advice, when you think about trends in the industry, and I think that names and terms that we use all the time now, independent advice, smart beta indexing, that stuff now is the norm. It wasn't the norm 23 years ago when I started. When we went into an advisor's office and we said, hey, we think there's this kind of approach to capital markets, people, they wouldn't laugh at us, but they thought that was so far out of the mainstream that it didn't even make sense. When we walk into an advisor's office now, everybody goes, oh yeah, of course, indexing makes sense, low cost makes sense, diversification makes sense, et cetera, et cetera. The difficulty for investors now is trying to differentiate those kinds of activities and the type of products that are jumping into that space now. So there's a lot more indexers, there's a lot more smart beta providers. But the question really is, you know, from an implementation perspective, how do you find the ones that do it really, really well? And I would come back to dimensional. The uniqueness for us is we've been doing this for 36 years. We've been in the space forever. We implement in a way that I think nobody else does. And so there's more of a, you know, rather than a broad gap, there's kind of this more intricate view that the advisor and the client has to take to understand. You know, when you're going to talk about implementing, you know, the idea, you're going to have to do it in a more intricate way than you had in the past.
Yeah, and I see the two challenges. One is the engineering of the original portfolio, with confusing things like multiple index funds and different betas and so forth, smart betas. So the engineering is a crucial piece of it. In addition to that, then, is the ongoing implementation and discipline. And I've seen, over the years, I've seen advisors create what look like pretty good portfolios, but then when the market crashes 30%, a client with $1 million says, "Well, I want all U.S., and if you don't give it to me, I'm moving the money," or add commodities because that's hotter. Or I've seen the discipline many times, even though the theory and the portfolio initial construction was good, but if the advisor doesn't hold the line, if the whole thing can fall apart. And a lot of people, you know, wolves in sheep clothing, you know, they talk the language, but then they don't actually do the deal with their clients.
It's too stressful. And I know, I mean, I'm not talking about advisors, I'm talking about to the client, you know, I mean, and it's like, oh my God, I just lost 20% of my money in the last week. And yeah, I said I'd be disciplined, but it was different then.
Right.
Things have
we have
changed.
new information.
We have new information, things have changed. And it's like, you know, ultimately you do have to educate people. But the other thing is, for advisors, you know, they have to trust you. And you've got to build that trust. And you know, it's by your own actions. And you can show them in past markets. I always found that to be very powerful, to show people, well, if you got out here and then waited to get back in here, look what that destroys your net worth. And it's like, and if you show enough of that, you're not going to get them all convinced. Never. You're always going to have the people that get scared and run. But, you know, by educating these people, and you get to the point where, especially if you can get through a couple of market cycles with people, they trust you. Yeah. They get it. Yeah, and then you're home free.
Yeah, I would say that's where the advisor comes in. So the coaching aspect, the human element aspect is so significant in terms of keeping people disciplined. Yes. It's the repetitive nature of the meetings, it's the understanding of the total client's situation, and it's a coaching process. And people bring up, you know, you mentioned earlier, robo-advisors.
Yes.
And yeah, okay, robo-advisors have index funds and they have an allocation and so forth and so on, but what they don't have, so technology-wise, they're getting to a space that I think is better, but what they don't have at this point is they don't have the human element. So I use a term from Australia, there's sort of that below the line and above the line. I think below the line is technology, and every advisor, including all the advisors we work with, have to get better from a technical and an efficiency perspective below the line on technology. But where the robo-advisors are trying to figure out how to get to is to get to the human element part. And that's where the advisor has the advantage in spades, because the advisor knows how to do all that coaching and interaction and understanding of the client. And getting that human element part right is very, very difficult. So advisors ask me all the time, should we feel threatened by robo-advice? Robo-advice is going to, you know, that term is going to push technology in a way that's going to make it all more efficient. So advisors absolutely have to think about technology and become more efficient. But that jump above the line to the human element part is a part where I think the advisor is always going to have the advantage, and that's going to allow the coaching to happen that's going to get somebody, again, from point A to point B over some period of time. So in my view, the advantage is to the advisor, with the wariness and the eye on the fact that they got to continue to be more technically efficient over time.
Yeah, I agree. I mean, so much. I always tell people, look, you know, you can have a playbook and give the Colts playbook against the Bengals, but unless you actually know how to implement the plays in the book, and
through four quarters,
and,
right.
and the complexity of the game, and you're not going to see, I don't think anytime soon, a robo coach coaching someone in the Super Bowl, because it's coaching is a human element. And at the end of the day, when someone is panicked, you can do all the education and give them all the information, but at the end of the day, if something really is askew that needs to be disciplined, that client's going to look in the advisor's eyes, and if they see fear and doubt, and they don't see ironclad conviction and faith and trust and courage, the whole thing falls apart.
No,
and you can't get that from a computer.
I remember years ago I was giving a speech. This guy got up and he asked a very good question. He goes, I agree with everything you're saying. I need to be diversified. I need passive strategies. But once I've got that, why do I need you? And I said, maybe you're the individual that doesn't. If you're going to be able to stay disciplined as the market goes up and down, well, then that's all you need to know. But I'm talking to the rest of the people out here who maybe don't have the same kind of discipline that you have. And of course, everybody's smiling out the audience. So they're going like, yeah, that guy's from India. We know he's a gambler.
But I think you're right. The coaching can take different forms, right?
Yes.
I was telling an audience last week about the advisor I work with, and my wife, who's not interested in finances at all and has no interest in having any kind of regular meetings with me or him. She said to me just out of the blue, she said, it's really great to know that he's around and that if something ever happened to you, that me and the 4 kids, there's one person I can go talk to and knows everything about our financial situation. He said, just that fact alone is so valuable to me. And I thought to myself, there's another aspect of coaching. It might not be the daily coaching of her, but the advisor role is this trust role that Dan just mentioned, which is that my wife, who doesn't interact with him that often, through my interactions with him, feels this great amount of trust with that advisor, and that gives her comfort and a sense that she's going to be okay. And that's kind of, at the end of the day, what we're all trying to do is we want to get clients and investors on a path that they're going to feel okay over time. They're going to feel okay immediately and through time, but also in the end, there's going to be some outcome that's going to be a positive for their family and themselves.
Yeah. So, couple real quick class sessions. Dan, where do you want to see if you had like this this magical dust and you could take the industry and the relationships with advisors and their clients into the future, where would you love to see this industry go in the next 25 years?
I think it's already where I want it to go, because at the same time you're always going to have I don't know whether to call it the opposition or what, but right now I feel that we have developed all of the tools, the communication skills. Not every advisor is as good as the next advisor at bringing this all about. And when you look at where we started a long time ago, it's a huge difference. I run into strangers to me, who come up and say, "Yo, you're Dan Wheeler," and I got to tell you, thank you for the last 15 years. I've been doing, dimensional stuff, and that's a great feeling. But as far as I'm concerned, it's already there. We're experiencing it, and it's not like one day we're all going to be passive and go to heaven. It's like, that's not the day I'm looking for anyway. But no, I'm not sure what you mean by that question, but I will say it is much easier to talk to people now, because the other side, the dark side as I call it, we've got them on the run. And they're always going to be there, but we've got them on the run. And initially when I started, we even had people associated indirectly with Dimensional who said, "It's never going to work. You'll never get individuals to do this sort of thing." And then I find guys like Mark, he goes, "No, we can do it."
So Dave, being the CEO, taking Dimensional into the future, co-CEO, where do you want to see things go in the future, and what are your one or two of your major initiatives taking over?
Well, I think like Dan said, I think we've gotten much more efficient. So the great news for the investor is, we can get frustrated sometimes to say, hey, things haven't changed, but they have, and they have in a dramatic way. And I mentioned that, we talk about it all the time with my team, my 285 people, my group, about Dan, and what was the vision, what was the purpose, what was the culture, and the culture was all about helping the other guy or gal get a better experience. And so that's what we do all day long. So as we talked about earlier today, it's like, you can get slightly better at that. Culturally, we're not going to change. That's what we do. Whether it's on the investment side, with implementation, we can be better, and we get better all the time. And we have a lot of academics and traders and portfolio managers looking at the portfolios all the time, the portfolios that you use, and asking the question, can we make this slightly better? Because 1 or 2 or 3 basis points even, or 10 or 20 or 30 basis points
adds up
over 20 years at some level of assets adds up in a big, big way. So our view on Dimensional side is we are trying to be the best we can, because advisors like you are independent. You can pick anything you want out there to implement for your clients. And we need to prove it every day that somehow or another that we are better than the next guy. And so the recognition for me on the dimensional side is we have more competitors in there, because the theory in the capital market view has now become sort of the norm. You know, that of course diversification, of course tax efficiency, of course you know, global diversification, all the things that we've been preaching for 25 and 30 years now is the norm, which is great. The challenge for dimensional now is to say, okay, we've already been in that space 30 years. We got a long body of work and track record on how we've implemented there, but we need to continue to stay one step ahead of the competition, so that advisors like yourself and the people you work with can look at us and say, you know, as an independent advisor doing the best thing I can for my client, this is my choice. And that's what we're in the game for. So, you know, I think as long as there's a model that, and this is the model that Dan preached, you know, 25 years ago to you and I, if there's a model out there that says there's these investment management groups, companies like Dimensional, and there's a set of independent advisors who aren't conflicted in terms of what kind of advice they give, that combination is going to get you to this investment success. And so I look at it, you know, every day. I mean, the reason why we're still doing it, you know, 30, 40 years later, is because, yeah, we look in the mirror and we feel pretty good that we actually impacted one family or one advisor or one client or somebody had an aha moment yesterday that got it. You know, that's why we do it. You know, we don't do it for really any other reason. So all you can really say to yourself is just, you know, am I doing something that's good for others? Am I, you know, are we being successful in getting that message out? Can we get a little better at trying to make sure more people hear it and see it? That's the challenge, and that's kind of the vision I have for the next 25 years.
You know, it's interesting, Mark, as I'm sitting here listening to the two of you and thinking through this whole advisor business. It's interesting to see that the idea that the reason we're doing this is making money. Because I know both of you, and I obviously know a lot of the advisors, and yes, it's great. I mean, we're all successful. You know, I'm more successful than we ever dreamed we'd be financially, but it's not. That is never what has motivated. And you know, I could. They heard me say a million times to the board at DFA, because they always want to know, well, how much business are you going to do this next year? And my answer was always, we do our job, the numbers will take care of themselves. There's too many things outside of our control. So there's no way I'm going to sit here and give you a number, because that's just not it. We're just going to do our job, and this thing will grow. That's all I can promise you. And you know, they're like, man, every other board I sit on, some guy tells me we're going to, you know, have the best. Yeah, we're going to pump it up and do this and do that. And so, and you know, it's like, I mean, all of us have more than we'll ever need. I mean, and it's like, but we don't sit around and talk about it. I mean, that's not what the mission is, and that's what makes the whole thing was always so exciting for me. We were changing and impacting people's lives, and I don't think life gets any better than that.
Well, they say, I read something about a healthy profession. A healthy profession is one where not only you're doing well, but you're doing good, and you feel good about what you're doing. And I think that's, you know, for me, like you, getting to bump into Dan 24 years ago, whatever it's been, it changed my life, changed my trajectory of my career, because I got into a space, and I was going to get out. I've told you, I didn't tell you this story today, but I was going to get out of the business and go be a teacher and a coach, because I just didn't feel good about what I was seeing in the financial services space. And when I heard Dan say what he said, it was that aha moment. I said, you know, I could do this, and I could feel good about it. I could come home happy every day, feeling like I did something good. And that's going to be something I can do I said to myself, I can do that for 10 years. Here it is 23 years later. But that's and I look at all the guys around Dimensional, David Bush, the same way. The guys that have been doing so for 30, 40, and 50 years, you don't do it for compensation or for any other reason. You do it because you have a mission and a purpose that you align with and lines up with your own personal kind of intuition and approach. And if you have that, you're super lucky, you know. And I think all of us could say we're looking back on the 20, 30 years we've been doing this, we are lucky to be in this space. It's really great.
Yeah, well, the day that I met you, and then eventually got to meet you, David, and the transformation you provided for me and my family in the American dream, and then there's over 32,000 families that we work with all across the United States that you've helped save. And our company's committed to saving 1 million families from speculating and gambling with their money. And it's really cool that, you know, Matson Money just turned 25 years old. I'd like to get another 25 and round it out to 50. And it's going to be a great journey. And I know you've transformed my life, all of our employees, all the advisors, coaches we work with, and all the families. You've had ripple effects that have just expanded out so far in people's retirements and helping get their kids educated and helping get their American dreams back on track because they're not panicking or not getting terrified and not speculating, gambling their money. And it's been definitely something that'll keep me going for another 25 years, God willing. And it's great to be in a strategic relationship.
I just want to say, too, congratulations on your success. But, you know, Dan and I walked around here for the 2 hours before this discussion, and, you know, the commitment to purpose is so clear here. And I think that's my takeaway after the last hour and a half or 2 hours we've been walking around here. It's very clear what you guys do, why you do it, and it's reflected in all the people that are in this office and obviously all the advisors that you've affected over the years. So I do want to say thank you for that. I think it's a very cool thing.
Thanks, brother.
Yep.
Yeah, you're making me mess up. My job is to make you cry. You made me cry.
Oh, yeah.
But I'm easy on that guy.
Yeah, no,
Thanks,
that's
guys.
so
Appreciate
true.
it. Great times.
It is fun.
Thank you.
Thanks, guys.